In this video, we're going to compare two popular high-yielding covered call funds that both reflect the performance of the S&P 500. Both of these ETFs are currently the highest-yielding funds that use a derivative strategy on this index in order to provide high dividend payments. And although both funds offer high yields, the strategies they use to generate income differ pretty significantly, which can make one choice better than the other depending on what you're looking to achieve. The two funds we'll be comparing today are the NEOS S&P 500 High Income ETF, ticker SPYI, and the Roundhill S&P 500 ODTE Covered Call Strategy ETF, ticker XDTE. Both investments offer double-digit yields, far higher than average compared to what you typically find from any individual company. This obviously makes them really attractive for investors looking for high current income, whether to live off of or to reinvest. So let's dig into both of these ETFs and determine which one is going to be the better investment. It's important that we first contrast the two strategies that are used by both of these funds. Both of them use a covered call strategy, but what makes them different is how they write their options. XDTE, according to their website, is the first ETF to utilize 0 days to expiry options on the S&P 500. XDTE seeks to provide overnight exposure to the S&P 500 and generate income each morning by selling out-of-the-money 0DTE calls on the index. What this means is, Roundhill writes their calls in the morning and they'll close them out before the end of the day. XDTE is also a synthetic covered call fund, not a regular covered call fund. These ETFs don't own the underlying securities in the index, but they rather seek to attempt to replicate all of the price movements of the index using derivatives. These kinds of funds have been made popular recently by companies including YieldMax and Curve ETFs. Exactly how successful they are at replicating the underlying security, or index in this case, isn't always great, but they are always better at offering the highest yields. But there is another huge positive to XDTE, which is that it pays weekly dividends. There's only a handful of investments out there that pay weekly distributions, and this feature of XDTE is a big reason why a lot of people like this ETF over SPYI. A handful of these synthetic CC funds that exist are now switching to a weekly distribution instead of a monthly distribution, I've noticed. As great as this sounds, there is one negative to this that I'll explain later. SPYI, on the other hand, functions differently in that this fund is more actively managed. In their prospectus, it says, from time to time, the advisor actively manages the written and purchase call options prior to their expiration in an attempt to capture gains and minimize losses due to the movements of the S&P 500. The fund's option strategy typically consists of at least two components. First, written call options on the S&P 500 on up to 100% of the value of the equity securities held by the fund to generate premium from such options. And second, using a portion of the premium received to buy out-of-the-money call options on the same referenced index to provide the potential for upside equity participation when the underlying index appreciates. So ultimately, all that matters is, what is this going to translate into for both of these funds? First, all of these covered call funds are capped when it comes to upside, but the upside is going to be capped so much more for XDTE than it will be for SPYI. And second, SPYI is going to have better downside protection compared to XDTE as well. What's been going on in the market right now is the first real test for both of these ETFs. SPYI has only been around for 2.5 years, and XDTE was launched almost exactly 1 year ago from today. Both ETFs have never gone through a serious drop like we're seeing right now this year. If we look at the share price performance of both of these funds over the past 6 months, you can see that SPYI has been much sturdier. The NEOS fund is down 5.1%, whereas the Roundhill fund is down more than twice that amount at 11.32%. But of course, if there's one thing I preach about all the time on this channel with these ultra high yielding investments, is that you have to do more than just look at the share price. You have to account for the dividends to get the full picture. And in terms of which ETF is offering the highest yield, there is no competition. XDTE is currently offering a yield of over 20%, and SPYI is yielding much less than that at around 12%. Using a dividend reinvestment calculator, we can see how both funds have been doing over the past year. Both SPYI and XDTE started really well, but you can see XDTE really started pulling out ahead because of those higher dividends being reinvested. It was also a bull market, which resulted in the Roundhill fund doing better. But starting on February 20th, the S&P 500 started trending downward. Note exactly how much more dramatically XDTE fell compared to SPYI. As of today, XDTE has lost about half a year's performance since the market turned red last month, whereas SPYI has lost about 3 or 4 months of performance. We've been seeing in this bear market that for these synthetic covered call funds, they do fall pretty hard in share price. And all of those high dividends that you were reinvesting also fall hard. Speaking of dividends, this is the dividend history for XDTE. In the last year, this ETF has paid anywhere from 2 cents per share to 64 cents per share. A question that I commonly ask when it comes to these synthetic funds, which have much more volatility, not just in share price but also in distributions, is with this kind of variance, how do you expect to plan a spending budget around these kind of dividends? There can be so much unpredictability that in retirement, you would find it hard to plan a lifestyle around these kind of payments, unless you're not heavily relying on XDTE to pay for your expenses and you have other holdings in your dividend portfolio. SPYI's dividends, on the other hand, have been a lot more consistent. There has been some growth, but the distributions are much sturdier. You don't see any dramatic changes coming from month to month with this ETF. This would make it a better holding for people who want a lot more predictability. So here's a side-by-side comparison of both funds with their pros and cons listed. SPYI offers a significantly steadier share price compared to XDTE. The dividends paid by this ETF are also much less volatile, resulting in more consistent distributions. This will make it much easier to plan a budget around if you're trying to live off dividends. SPYI also has a much lower expense ratio, almost 30 basis points lower. The negatives would include a lower yield and monthly payments instead of weekly. With XDTE, you do get higher dividends that are delivered weekly instead of monthly. This can make XDTE a much better performer during bull markets. But the downsides would include significantly more volatility in share price and dividends. As we saw earlier, if you're planning a budget around these kinds of distributions, it's going to make things much harder. Ultimately, lowers are going to be much lower when comparing XDTE share price to SPYI's. Bear markets are going to hurt much more for holders of XDTE than SPYI. It's also a much more expensive ETF to invest in with its higher expense ratio that's close to 1%. Now that we've compared both funds to each other, the question we have to answer is, which is going to be the superior income fund? The biggest component to answering that question is all going to depend on your risk tolerance. XDTE is a higher risk holding than SPYI, and it doesn't weather bear markets nearly as well. But it'll perform better than SPYI when the market is soaring. With that in mind, I'm personally a bigger fan of SPYI for its lower volatility. It's an ETF that I feel much more comfortable holding during down markets like what we're going through right now. During a prolonged down market, you'll want to make sure that you're reinvesting your dividends if possible or doing what you can. It'll definitely help alleviate the pain. Let me know your thoughts if you prefer holding XDTE or SPYI, or do you think there's a better option out there that exists when it comes to high-paying monthly or weekly dividend funds? Feel free to leave a comment, but with that being said, that's going to wrap up today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.